Hello and welcome back to Beyond the Cards, your monthly podcast about the payments news that you most want to hear, given to you about the favorite people you like to listen to. How are we doing, everybody?
We're doing
No.
good.
Hey
It's
there.
Friday.
It's Friday. It's a summer episode.
Yes,
A
yes,
lot
yes.
going on.
We have our Paris folks back.
Yay!
Welcome back, guys.
We have them for one more month
Yeah, thank you.
Okay.
Hello
before they
everyone.
leave us again.
No. You mean the month of August, right? Which is complete dead here in Paris. Like nobody. Nobody's in
Indeed.
Paris in August.
Jealous. August is like the hottest time of month for us here in Texas, so I always seek vacation up north to be like, oh, it's only 85 degrees up here instead of 110 or like 44 degrees Celsius.
I know it's going hotter and hotter here in Texas.
I try not to think about it. Well, should we crack on with our first story?
Let's do it.
All right. So we have some reporting out of Europe here that an investigation was put in by the group Investigate Europe into Visa and Mastercard for positing and finding that Visa and Mastercard were used as payment methods on several illegal gambling websites in Europe. So, interestingly and probably confusingly, in the US, sports betting and gambling are legal now. So, of course, we have payment acceptance here in the US, but I guess it is illegal in Europe.
That is very interesting because now with all the sports betting and all these websites coming out, it's hard for anyone to kind of stay away from it anywhere.
Yeah, and interestingly, they were targeting customers in the UK, which I think and they being the websites that were hosting the illegal gambling were targeting people in the UK, and I wonder if it was trying to create or make some confusion around like, well, the UK, it's maybe legal now because Brexit, so maybe people were getting confused. Obviously the size and the scale matters here. It doesn't sound like it was a massive operation. But it does really raise questions of, merchant setup in general, right? Like, how did an acquirer who set up payments for this merchant not figure out that they were gambling websites? And also, how did they not immediately take them down?
That is a good question because normally they get flagged very, very quickly. And from my knowledge, and I could be wrong on that, but I would believe that they will get flagged very, very quickly. So for this to be going on for a while, it's kind of surprising. And how
Yeah.
you get set up,
Yeah. How did you get set up?
right? How did you get set up? Because normally, if you're a gambling, it can kind of get flagged from underwriting from a underwriting when they're set up. So is instantly denied. So how did they get through those rails? That's a good question.
They probably would have had to try to set them up. And I think the thing that's like interesting is like, what type of gambling was this? Like, I don't know if anybody else is into Labubu's. they're like these little monster dolls that are apparently like really popular. It's honestly like Beanie Babies
Are those things
3.0.
like keychain things?
Yes.
Yes,
Okay.
Yes. But they're sold in like mystery boxes. So like if you really want one, you only have like a 1 in 8 chance of getting the one that you want. So you have to like keep buying them to try to get the one that you want. I would say that's gambling. Apparently people have other other definitions that that's not gambling, but so it's like what type how like how did you maybe construct or say what your business does that maybe looked on the surface not like gambling, but actually was defined as gambling? I think the other thing that this kind of points out is that like Visa and Mastercard are very good at keeping their networks clean, but they're also managing like probably like trillions of transactions. It's very hard for them to just like pick a transaction out of the air and be like, yeah, that's gambling, right? Like they have to, and I think this story alludes that they do rely on essentially the ecosystem to self-govern. And I think this is what kind of they mention here, right? Which is like, hey, we do our best to sniff out suspicious transactions on the network, but ultimately we rely heavily on the acquirer as kind of that on-ramp onto our network. So if the on-ramp is broken or not functioning correctly, well, that's how these people can slip on. And sure, the second we're notified, we'll immediately terminate their business. But I think it does really just kind of show that in order to keep the entire ecosystem safe, you need good actors in all parts of the chain to make sure that it's governed properly.
Mm. Yeah, it's rather a question of responsibility, what you are saying. I mean, is it, sorry, Visa responsibility to clean these actors, or is it really acquirer responsibility? Acquirer that may, I mean, work more on an elevation in a way on their KYC checks and so on, and better monitor also the traffic. But I think that it's I may have an unpopular opinion also, because at the end of the day, as you mentioned also regarding with the example of Labubu's, is that it's always the same kind of industry that are pinpointed in a way. We are claiming, and Visa is claiming that we have a lot of gambling website and so on, and in a way you have also acquirers the responsibility to have enhanced technology to be to face, I mean, this kind of risky merchant, no matter whether they are gambling and so on. So it's a little bit too easy to say that it's these kind of industries fault to that it's this industry that in a way uh, does not enable the system to be clean.
Mm. Yeah, and I think it makes it more difficult when like especially as we become more globalized, usage of say like VPNs, which may obscure your actual IP addresses, geographic location, and you have a like a major economy, the United States, where like especially online sports betting is legal and it is wildly popular.
Mm.
I have friends who are betting all the time on like everything.
Especially on soccer, football also. we
Oh
have a,
yeah.
we, we are good on that.
Yeah,
But
so I could see how it's easy to potentially get on the on-ramp and then potentially obscure, you know, and say like, "Oh no, this is a site in the US and this is all happening in the US," when it's really maybe potentially like a site from the UK or something like that.
Yeah, and in a way, even what is interesting also is that I mean, the gambling and the gaming industry, especially, they have always been, in a way, it's a good thing to have this kind of situations also in a way because it enables also technology to be developed and to be enhanced. For example, no matter whether it's fraud or for example, I don't know. I think that you know about the payment orchestration layers, for instance, that have
Mm-hmm.
become very popular in Europe and very popular to retail merchants. But if we buy, and it seems that it's an innovation, but it's not something very innovative because there are actors that were present 20 years ago and especially working on gambling industry. You see what I mean? So in
Mm-hmm.
a way, uh, those kind of industries like gambling and everything regarding problems of KYC and so on shall not be considered as only a bad thing by the networks, for instance, but also shall be an opportunity for the acquirers to increase their technologies to improve sorry their technology to improve um, the way to detect fraud also. So it shall be taken as an opportunity for acquirers that most of them have already specialized, fraud tools within their solution, their overall solution. But at the end of the day, it enables also some fraud specialists to be a little bit more present also and to be more competitive also in this industry uh, in comparison to uh, standard, in a way, acquirers. So I think it shall be taken as an opportunity.
Me,
I think that's a
I will share some additional complexity. I know you love it, guys, but isn't all this messy compliance related stuff something also which is the result of the global economy, cross-border situation that the networks create, allow? Because let me explain that. What I mean
yeah.
is, gambling is regulated. Why is gambling regulated? Because it generates a lot of money. Okay, so all governments want to take their portion of the cake, and they don't want other governments to take their portion of the cake. So they say any gambling activity coming from anywhere else than my own country is illegal. But is that illegal for the country where the payment is processed in cross-border? Like processing in the US, an activity that is considered illegal in whatever country in Europe, in Asia, or anyone else. Is that actually illegal? Not sure it is. So I think it's much more gray than we can think. For sure, illegal activities are illegal, like, anything that
We
is
don't need to name them.
exactly. We know what they are. But what I mean is, in this type of situation, illegal is really vague and gray.
Yeah, I 100% agree. I think like, I think the whole idea that it's legal in the US and like looking back, right, at the reporting, like it targeted people in the UK. So it like targeted English speaking people. So like was there some sort of like, hey, you're actually participating in the US, but that the payment being processed in the UK, and it's like that payment being processed in the UK was the illegal part, but the participation and the gambling wasn't illegal. I think
Yeah,
you're spot on. Like, that doesn't seem like there was clear rules.
yeah,
And
because
who
some
is
of
defining the
these.
rules there?
Go ahead.
No, I was just thinking out loud. But indeed, who is defining the rules there? Are the networks then regulating? I don't think they can. Who is deciding? Is it the country where the merchant is sitting, the country where the payment or the card holder is sitting? Both known? So gray.
And that's a good
Mhm.
question because some of these websites use your location, and depending on where you are on your location. So, Gab, if you're here in the US in, let's say, Vegas, and you log onto the website is just kind of looking at your location that you're in Vegas. You're in a legal state to gamble. I don't think they're looking at the back end of it, of where your card is actually fully processed or where that card holder sits, which is in the UK. It's a UK card. So that is a good question, and that is a gray area, because maybe if I am in the UK and I log on, I can't gamble because my location says I'm in the UK. But back in the States, depending on if I'm in a legal state to gamble, for instance, Vegas, Louisiana, Oklahoma, I can do it. So that is a good question. That is a gray area.
And don't
Yeah,
even
I mean, I
talk
think it's even I think
about
it's even a gray area in the US. And I kind of want to go back to like Shira's point too about like it shouldn't necessarily like these types of kind of investigations and exposures, right? I agree. I don't think that they should be considered necessarily a like a bad thing, like a oh, look at how bad Visa and Mastercard are. No, I think it's kind of to your point, Shira, it's kind of like an immune system. Like you have to give it these like lots of low level exposure. So like the immune system doesn't break down, but it gets stronger because it's encountering more of these potential areas of friction or bad actors. And when it's small, it's easy to detect and learn new ways to manage and handle it. And I think to everyone's point, right, like especially yours, Gab, right, like do the networks and acquirers get better at detecting things like where the merchant is located, where the card holder is physically located, where the card holder's card was issued from, where is the payment being processed? Like seems like a lot of different points that need to be taken into consideration in terms of like future enforcement and compliance, because it can't just be like, okay, well, my card was issued from the UK, because what if you're physically in the US using that UK card, right? Like, you don't want that to decline all the time. I'm not going to get just a US card just so I can gamble in Vegas or gamble in, depending on, and again, like, I'm not a gambling expert. I think there are differences between on floor and online gaming, because certain states have rules about on-floor gaming. I mean, Chelsea and I grew up in Montana where like low stakes gambling is like literally legal everywhere, and like you can pop into a Lucky Lil's casino when you're getting gas.
But that's where you can't use your cards, is the in person.
Yeah.
Because I was thinking
So
about that. I was like, well, it'll continue to just boom online. I was even a little bit different, but I was listening to a article about these happen to be in Texas, these shops that are opening up for people to buy scratch tickets online, and they have
Mhm.
machines that just sit there and scratch the tickets. So people buy the scratch tickets online, and then it's like real time they're scratching them off, which is just crazy. So because there's this whole group of younger generation who don't, this is like small town gambling, right? Don't want to go into the gas station and buy it, but they want to buy them online. They want to buy their lotto tickets online for like the Texas lottery or the California, whatever state lotteries there are too.
oh, come on, youngins, going in to a gas station and buying a scratcher and scratching it right there. That's all part of the fun. You win that dollar, you go claim that dollar, you buy another scratcher, you try again. All right. Well, should we, speaking of other types of interesting levels of enforcement, etc., we have a story here on Remitly being shorted by a short seller. And primarily what they're claiming here is, Remitly is a service that people use to send money all throughout the world. It's like a Western Union. It's kind of like the fintech like new version of Western Union. And what they're claiming is that the like customer testimonials, which like build up customer trustworthiness and also play like a really big fact in capturing market share, because transmitting money around the world is actually like a very big business. They're claiming that these customer reviews and testimonials are dubious because they did a reverse lookup and found that one was fake or manipulated. So they took a short position on the stock. And interestingly, though, there's no discussion that and I think this is an odd position to take, because I'm like, there is no real discussion that Remitly's not doing what they say that they're doing. I've never used Remitly, but I hear commercials for it all the time.
Yeah, sorry. I agree. It even though they are going back and they're seeing that these quote reviews are linked to what it seems like not real people, right? Not real profiles. I mean, we know that many other people, many other organizations pay people for their reviews. So in a way that's slightly different, but it doesn't mean that they're not completing the payments, etc. But they must just be saying, oh, we're going to bet against them because this seems untruthful.
Yeah, I mean, they make another claim, which is that the kind of legacy systems of transferring money that Remitly uses and has clearly not put out a plan for, is that they don't have a stablecoin offering. And so that basically, if I'm reading the tea leaves, I think that essentially what they're trying to say is yeah, claims are dubious, but also it's a losing bet into the future, because other companies who are planning to use stablecoin settlements to transmit money more efficiently and quicker, they're going to start taking up the wallet share of these customers. And that's going to basically make this a losing stock in the future. And that could be potentially true. However, at least in a lot of reporting that I've seen and have looked across, most stablecoin and crypto coin usage is done so outside of the US. And I'd have to imagine we're looking at wealthy Western countries sending money to other countries. And it's well, is that really happening here in the US? We get in fiat currency and sending fiat currency to these other people. So just an interesting kind of take on a company that's still doing what it purports to do, and seemingly effectively. I don't know. Remitly didn't respond to it. And I don't use, like I said, I don't use Remitly.
I don't use Remitly.
Maybe this is also just a more of a trend, not a trend, but looking into some of the marketing tactics, etc., of some of the fintechs, and highlighting, well, if they're doing this, who else is?
Yeah. Yeah.
I'm
And I
sure
mean, I
there's
think
a
we
lot of others.
all rely on and I mean, I feel like I've been relying on them less. I sometimes now get a little bit suspicious if there's too many reviews on something, or I'm like, how did you get that many reviews?
Correct, but I think a lot of people look at the reviews in order, depending on whatever the product is. But some of the reviews that you see can be kind of questionable, especially if it's too much or too much of the same kind of content of the review.
Either way, that short seller's position did pretty negatively affect their stock, and it'll be seen if they recover. I mean, it also reports that Remitly stock is down overall. And I think, Chelsea, to your point, that kind of alludes to the fact that maybe investors don't see Remitly as innovating enough in other areas of, cross-border money transmittance. Which, I mean, this is all building up to some topics that we're about to just discuss. But let's just quickly cover this Affirm story. Put up a payment. So Affirm, I think we've talked about this a couple of times here and there. But Affirm, we knew is going to start providing kind of pay in 4 installments to the credit reporting agencies here in the US. But now it seems like they are going to be reporting all pay over time loans to one of the credit reporting agencies here in the US. So I think that that's a pretty big deal. As even reporting the pay in 4, because it has been kind of a dark area of growing debt for Americans, and it not being on a credit report is kind of a big deal, because you may go out and you may be saddled with a whole bunch of pay in 4, pay over time loans not being reported. Then you go out, get, let's say, a car loan or a home loan, and then you default on that car note or home loan, and then they come take your car. And so it does make the entire credit worthiness system weaker, not having these kind of buy now, pay later entities reporting into those credit reporting agencies. And I'll also add, pretty sure this is all voluntary. I don't know, Chelsea, Jasmine, I don't think I've seen any laws suggested or anything progressing legislatively that would say require all buy now, pay later companies to report their pay in 4 and pay over time loans to the major credit reporting agencies.
No, there's no laws, but I think this will probably, with the firm doing this, more and reporting to different creditors, that it will kind of force the others, especially the bigger ones, to do the same, to follow suit. I mean, because what it does is continues to allow people to go to different ones. And if I don't get one over here, I can get one over here, I can get one over here. And then, you have a whole bunch of debt out there in somewhere. So I believe this is a good idea, actually. And I mean, it helps the consumers as well, but it can be a crutch also. So I think them reporting it is a good idea, honestly.
Yeah, I do too. I think a couple sessions ago, we actually were talking about, I do not recall which buy now, pay later it was, but the just sheer number of late payments they're starting to see. So hopefully this could help with, reinforcing customer behavior a little bit, even though it's going to be dependent on whoever chooses to
And
do some
honestly, I
type
think
of reporting.
Affirm is one of the more stricter ones too, buy now, pay later companies, as far as the requirements and everything else. They're not like a easy, here you go,
Yeah.
credit. I think so. I mean, there's a lot that you can just easily get through. But there are also some that you can have a certain amount that you're approved for, but they won't give it to you all at once.
Affirm's expensive too.
It is.
I mean on my fitness journey, I decided to buy a bike, and good quality road bikes are not inexpensive, and I remember the retailer gave me the option to use Affirm pay over time. It was like a 12.99% loan, and I was like, I'll just buy this on my credit card because it's less than that. But obviously, like if you're somebody who maybe doesn't have the best credit score, your actual credit card might be like 20% APR, right? Because you may not really should not really have that credit card. So I can see where like some consumers might see it as a more expensive option, but for others it might actually not be. And I definitely agree in the voluntary turning over. I think kind of sets a firm apart as kind of being like, hey, we're the good guy on the block. And it may also, again, like signal to investors that says, like, hey, we are a safer bet than maybe some of these other buy now, pay later services that are growing rapidly. Because they're like, but we're growing on a stable footing, and customers using our service aren't defaulting like crazy.
But it seems also that we are, I mean, if we go back to the aim initially of the buy now, pay later payment method, uh, it was not supposed to come to this end in a way. You know what I mean? It was supposed to be innovative and so on. And it seems that we are going back to a kind of more traditional um, credit financing thing. So, i- hmm, it's not what it was supposed to be at the end of the day.
I just think it's only right because at the end of the day, these guys are giving consumers loans,
Mm.
and it makes the consumers more responsible, um, especially in buying things and getting these loans because the interest rates on some of these buy now pay later are ridiculous. So,
Well,
and
I
it's
think they would argue that a pay in 4 is not a loan.
well, you're right, it's not, but I'm giving you credit and you're paying on it. So, I mean,
Well,
technically,
yeah, I always loved like from a consumer perspective, right? We all see it as a loan, but then like, in the technical financial framework of it all, it's like, no, buy in 4 is technically not a loan, but a pay over time that goes beyond 4 installments is a loan. So it's just confusing altogether in terms
Yeah,
of like
it's
the
confusing for
classification.
it's confusing for the end user, but it's also confusing for the merchant himself because at the end of the day, would he rather have a buy now pay later method if at the end of the day it generates more friction, more risk in a way if the user is aware of uh, of his non-ability to pay his loan alike.
Mhm.
Is the merchant will be eager to suggest such a payment method, which is supposed also because it was built also to boost conversion voilà, to boost conversion and to boost sales, but if it generates such friction and such um, f- uh, uh, frighten by for the end customer, would the merchant be interesting in proposing, suggesting a buy now pay later payment method?
Yeah, and I
No.
think we've talked about that before, right? Like there's a specific reputational risk
Mm.
to the merchant, right? Because does the consumer recognize the difference between the merchant themselves and the buy now pay later service, right? Like, and a lot of that checkout experience, to your point, Shira, like they try to make it as frictionless as possible, but as you make it seemingly less frictionless, it becomes more and more looking like it's the merchant's checkout process and that they're in ownership of it. So then when you start, have late payments and start getting fees, tend to think consumers will blame the merchant, not the buy now, pay later service overall. And that may negatively impact the merchant's reputation. Like, especially as like it's getting buy now, pay later is getting added for everything and anything at this point. So the cat's definitely out of the bag. Um, it's just a matter of like, will financial enforcement or financial reporting kind of catch up with how fast the sector is growing and moving?
I think the question that I have, or that I'm wondering, is that these merchants that use the buy now pay later services, how much risk do they actually hold when a consumer is using that option as a payment method? I'm sure they do have some, but I'm thinking that once they use that, the buy now pay later services provides the full amount. And then if the consumer does not fully pay, do they take a hit per se, a certain percentage on that? Or does all that risk is held with the buy now pay later?
I think the risk is held
So
with the buy now, pay later, and that's part of the reason
Exactly.
why typically the fee for the service is so much higher than, if you were to just take a debit or a credit card.
Because
um,
for a merchant, it's very expensive to propose this kind of payment method because, of course, it's supposed to boost conversion, generate less friction, and so on, enable the
de-risk.
end user, voila. And at the end of the day, but you are paying. I mean, this transaction will cost you much more than a traditional transaction, and in the case, the cost associated to this buy now, pay later payment method, you have also, I mean, the merchant has his revenue in a way guaranteed also by the buy now, pay later payment method.
Mhm.
So, and the buy now, pay later payment method are generally endowed in a way with a kind of insurance service also, so insurance partners, uh, which enable them to cover the unpaid charges and so on. So that's the reason why it costs a lot to the merchant.
Well, and didn't we just recently cover too that there was an FTC rule that said that got reversed, that said that they don't have to provide similar chargeback protections like you would on like a credit card? So that just makes it like, again, like as a consumer, you may be checking out using that and not realizing that you're ceding certain rights to file disputes against it. And now I'm sure, these services have dispute mechanisms, but to the extent that they are as robust as, say, a credit card, I would say they are certainly not as robust. And then also from a merchant perspective, it does also complicate kind of that dispute process from a merchant perspective, because now, depending on when one of those services sends the disputes to you, how they send it to you, how they respond to it, etc. Again, I think that can just, potentially create reputational risk. Well, should we start getting into the discussion of what I feel is all over the news these days? And we'll start with this story
Yes.
from Investors Business Daily, um, which is basically the Gen 3 girlies. They're fighting, and in a sense that basically, and what this article covers really is that Stripe, in particular of the Gen 3s, is making a lot of really concerted efforts in kind of the hot topics that investors are really excited about. Things like enabling AI, things like adding stablecoin settlement, And the rapid proliferation of these technologies that Stripe is garnering is, one, accelerating their growth, which is making them like really attractive to investors, and increasing their profitability. But then that's also putting the squeeze on kind of the other Gen 3 compatriots who are not able to essentially do as much R&D as essentially Stripe is, and pushing in those innovations. And they do specifically call out, say, PayPal here, PayPal by way of like Braintree, Adyen, and Fiserv, which typically Fiserv is not considered a Gen 3. Controversial statement. I think they generally get considered Gen 1 legacy, but what are your guys' thoughts on this? I mean, I think the part about the AI companies choosing Stripe and boarding heavily on Stripe was really interesting to me.
Yeah, I saw that they're counting, did it say half of the Fortune 100 customers, which is a big deal. And then again, that targeting of the AI companies. I think they're just having a very good year when you compare it across the board to a lot of their
I would say, like, I take that Fortune 100 comment with a grain of salt, because I bet you those Fortune 100 have multiple acquiring partners. I swear I've seen decks where I'm like, all of you mentioned the exact same client that you are proudly processing for. And it's like, well, yeah, of course, because they probably have business split up. But yeah, I definitely think that the kind of openness and kind of forefront thinking of Stripe, right, makes them attractive to other like-minded businesses, which I think is also kind of why, and this article mentions why, like, a lot of these AI startup companies are choosing Stripe, because they kind of see themselves in, like, oh, well, they're just like us. They want to do all the same highly innovative technological things that we want to do.
Right. Stripe is building to get their hands in almost everything. And I think that scares a lot of the other Gen 3 companies to try to be more competitive, even if they never thought about getting into these things. And so it's like, what do we do? How do we compete with them? Right now, they're thriving. They're thriving right now within everything.
Truly slaying the competition.
Slang is the right word.
Slaying the game. And I mean, really, like, it's seemingly that they are really putting the squeeze on, at least from this article's perspective, PayPal. They also bring up Block, aka Square. I don't know, because I really just have not, and maybe it's because, we're elitist and we're in the enterprise space, but like, I just don't see a lot of Square outside of the SMB space. So something that kind of confuses me with that, of especially like, say, stablecoin integration, is like, if you're primarily SMB focused, like, what is stablecoin really getting you? I don't know.
I agree. I mean, on your point, Dan, I don't think for SMB stablecoin would make a lot of sense, because there is no complexity. It's more when SMB are participants of a marketplace, then they're not the merchant of record, when it starts to make sense. I mean, they could be some eventually, but yeah, I think it's more on the platform side. I think this move that we've been seeing from Stripe for the past few years is just crazy. A company that started with SMB has become the tech leader worldwide with all those big names, even though, as you said, they work with multiple acquirers. But definitely Stripe has become the solution for these type of companies.
Oh yeah,
They've done pretty well.
I mean, I feel like we, or maybe I specifically, I like call it the stripification of API documentation, right? Like everyone in the industry moved to that model because they were so threatened by that open API, its elegance, how useful it was. So like, we all watched over the past few years as everyone's API documentation started to look more and more and more like Stripe's, which I think is a good thing, right? Like, if you want developer-centric companies and startups coming your way, locking your API behind a paywall or a salesperson is probably not the best bet for you, because they're going to go to where they're going to get a free resource or free developer account and play around. And that, again, is that like stripification of API documentation.
You're right. I get. So I guess they managed to make the SMB style like the rule, the standard for everyone. Because if you think about it, why would Stripe at the beginning make such a good documentation? It was just for people to be. It was self-made. Like you do it on your own. You don't need support. You're SMB. You're worth my effort. But now they got to scale this level of documentation for the big accounts and developers that prefer to be autonomous rather than having a support to understand something they can simply read if written properly. So yeah, and very interesting. And getting maybe back to stablecoins, I think, to all this stablecoin investment on AI, I think the move has been much better perceived than the one that Klarna made. It was, I think, a couple of years ago. You remember they made a huge announcement on AI, and the valuation just went up. But then a bit later, there was starting to have to be a lot of doubts around, because the level of service was going down. So far, doesn't seem to be the case on Stripe. But yeah, they're right where they have to be in terms of tech.
Oh, well, whether AI is a company claiming to use AI is legitimate or not is one of my favorite topics of being like, okay, well, where are you using AI, and are you actually doing it to say the things that you're actually doing? I don't know if you guys want like a really interesting story, listeners, and look at like the builder.ai scandal. That's like really fascinating, because it was a company that basically was saying like, we use AI to do 80% of the development of your app. Like, hey, SMB who wants to launch a payment app, you don't need to have any developers, right? You just need to have a great idea. You come to us, you articulate the idea. We use AI to generate, 80% of the code, and then we do the 20% finishing. Spoiler alert, it was all done by like people from India, Indonesia, Ukraine, Poland. It was all humans doing the work. So
that was crazy. When I read that, I was like,
yeah.
Yeah.
So this brings us up to like, I feel like what we've been alluding to, right? Which is, I feel like in the news lately, you cannot escape the discussion of stablecoin settlement. It is everywhere. Everyone is talking about it. A lot of news gets generated about it. There's tons of investor buzz around it. And I think this article from Axios kind of, and I think it's a very fun that they put it in like a Game of Thrones-esque discussion. It's really important because you have all these companies racing to innovate and include stablecoin settlement, which is most effective and has its strongest business case in cross-border settlement. You have all of these companies racing to get out there, introducing their own stable coins, and it's like, okay, but like we can't have 25 different global settlement players all using unique stable coins, because then like where's the interoperability? But all the kids are competing. So like I think I saw like PayPal has a stable coin, Pfizer's coming up with a stable coin. I think I heard JP Morgan is coming up with a stable coin.
Bank of
Obviously
America.
Block.
Mhm.
Yeah. You know, obviously there's Circle, there's Tether. There's just so many. And I know that we have some future stories to talk about in terms of like what does this all mean from like a compliance standpoint, and just even like a monetary policy standpoint. But I guess like, and I was talking about this with someone internally here the other day, which is like I guess the part that I don't get, and I still don't get, and maybe it's just because I'm not super into the world of like blockchain crypto, is I get from a public ledger perspective, there's a lot of transparency. If say you were sending money from US to say France, and where you would traditionally use like a correspondent bank setup, which is like say my bank and the bank of my customer or my buyer in France are different, we would need to use a correspondent bank to send money to each other. So I send money to that correspondent bank. That correspondent bank has a presence in that country, so it can send money between itself. And then that once in the country, it sends money to the my buyer's account. Like that is obviously a slow system. It requires a lot of information to be sent along with that transaction. And primarily that was the Swift system's whole thing, right? Like Swift is not in and of itself a money moving network. It is a informational network. So I see the use case that the blockchain is very efficient for tracking the transmission and recording the transaction very clearly. I guess I still don't get how the money actually moves from account A to account B.
I think so. I'm not very much into it either, but what I think, the way I sort of visualize this process is that as for the correspondent bank, there is an exchange somewhere. There is an exchange of money between banks. So here there is an exchange of currency. So you need to convert fiat into stablecoin. Then stablecoin is sent anywhere in the world, and then you convert if you want to either receive or keep stablecoin, or you want to convert it again to fiat. So I guess there is still a conversion, and especially the more we will have different stable coins that can be based on different blockchains, but each of them is creating actually a different stable coin. So much more efficient for sure. There is still this aspect of conversion. Who is converting? And I guess we get to the aspect of all the banking and financial world is about security, compliance, resilience. So what if this money goes nowhere? What if what if this platform, even though it's proposed by JP Morgan, so very robust and with a very high reputation bank worldwide, but they are based on a blockchain. What if this blockchain, for whatever reason that we don't know yet, stop working or is hacked? And you could tell me, that is secure, that is even the essence of the blockchain, that you cannot hack it, whatever. But what if what if the money is no longer secured by a bank, is somewhere else? So that's my concern about this efficiency. For now, nothing apparently that has happened. But I don't think the amount of, well, although I was going to say that the amount is maybe not that high, but I read a few weeks ago that the amount of money transfer over stablecoin is higher than the amount managed by Visa, Mastercard, or something like that we shared recently. I think that's another interesting story. So yeah, that's the way, getting to the point, and that's the way I think the process is. So still conversion, but way more efficient.
And what is the difference between all these stable coins? Like, how do you, it's like the comparison of all these people in the banks and states, because I think I seen somewhere, I read an article that Wyoming is the first one to issue a stable token within
Oh
the state
yeah.
database. And so it's like, what sets aside, what differs, what comparisons do you have? Right. Which
Why do they choose?
one is
That's
best
what I
for,
was
you know,
wondering.
because you
I
got
think
Walmart, Amazon, PayPal, Mastercard is launching with Fiserv. Like I said, Wyoming state.
I think you're gonna see though that they stay with the larger ones that have the backing, because some of them are definitely gonna be considered higher risk, right? And they're gonna go also with the ones that are connected to their banks or their acquirers. But I was wondering the same thing. How do you, if there's all these choices, it starts to just become, is it gonna just be unlimited in terms of the offerings?
Well, and I think it also
I don't know.
depends as well as like what, stable coins are backed and pegged to fiat currency, so that it's also like, well, what currency is your stable coin pegged to? Is it US dollar? Is it euro? Is it GBP? I think that again impacts like overall monetary policy, right? Especially because stablecoin kind of moves out of the purview of central banks. Um, but I also agree. Like, I think I don't know. Like, I put a lot of stake in the on and off ramps. Like, I think those are the critical pieces of the infrastructure here that don't really get talked about enough. And like going back to your point, Gab, like, yeah, JP Morgan, right? I trust that if I'm converting fiat into a stable coin and transacting across and using like the JP Morgan stable coin, I have a lot of faith that the money being transmitted across that kind of stablecoin exchange is more legitimate than potentially all of these other, I guess, exchanges. Because I'd imagine that's how it has to happen, right? Like an exchange is going to have to facilitate that blockchain and then creating the on and off ramps to move the digital currency into fiat currency. But maybe also the push is with stablecoin settlement, right? Like, do we eventually see that it just becomes a payment method in and of itself? I think that's a dream. Like, do you pay with Visa, Mastercard, or Tether? And like it can all, I mean, I think their dream is that like whatever amount of money that you have in your bank account can be fiat or digital at like the snap of a finger. And so you should be able to like pay in all of those different ways. Right now, like my kind of opinion about this is that like there's a lot of talk about stablecoin settlement, and yes, it's happening. But like it's also kind of the same conversation as like FedNow and RTP, where like they're putting out all of these numbers of like, yeah, all of these payments are happening over FedNow and RTP. But like, is that just banks sending money to each other? Or is that like actual like people sending money to businesses? I think personally, I think it's a lot of banks sending money to each other. And right now, is a lot of this stablecoin settlement that's happening. Is it are they legitimate transactions for products and services, or is it just money movement because money has to move?
Honestly, it sounds like more of a money movement.
Yeah, that's what I'm leaning towards right now.
Yeah, because if I'm converting the cash into digital, it's like that's just moving money around. Huh.
Yeah.
But as you
I
mentioned, also in the future, maybe they will be considered rather like payment methods are considered today, and that you would need, in a way, a kind of acceptance protocol to build also something that is shared
yeah.
by one. So it depends on how you consider it. And I think that we won't, it depends on who will be the one to tell us, I mean, to decide which of the two it is. In a way, it's rather a movement of money or rather a payment method. So it will depend. Everything will
And
depend on this question.
and ultimately this is like I feel like the story that Axios is telling, which is like there are all of these players trying to compete for dominance and scale because they know the one that gets out first and gets the most market share is going to be the player in the future, right? Like to me it really seems like the goal is get to supremacy as fast as possible and drown out the competition. And I mean, like, listen, right? I think an analog for this is like if someone's talking about AI, I think like probably 80% of the time they just say chat GPT. Like I rarely hear someone be like, oh, Perplexity or Gemini, right? Like it's becoming just the catch-all term for AI or like this specific Gen AI product. It's essentially becoming like the Q-tip or the Kleenex, right? And I think that's what in this whole stablecoin settlement race, everyone is racing to be. They're racing to be the Kleenex or the Q-tip, right? Like associate our brand name with this technology and no one else's. And I mean, we can wax poetically about, my particular concern again, on and off ramps. Like, how do we implement strong KYC and anti money laundering into this crypto stablecoin space whose like whole ethos is like anonymity? Because at that point, right, like if you're, let's say, an acquirer or a bank that's doing stablecoin settlements, right, your whole job is to make sure that money is not being laundered or business isn't fake or, sanctioned persons aren't receiving money or sanctioned organizations aren't receiving money. And to like quote Jurassic Park, right? Like you were too concerned with figuring out whether you could do something. You didn't stop to think about whether you should do it. And I think we're kind of in some sort of in between zone there. And like this might be like a controversial take, which is like, yeah, we are racing to get stablecoin settlement out there and functioning and providing use cases for it. And I think we're doing that faster than we're thinking about the compliance aspect of it. Because I mean, like, someone's I just feel like in the next 5 years, we're going to see a major player in the stablecoin space get some nasty, nasty article written or bombshell news expose that's like, yeah, company ABC was found to be funding terrorists through their stablecoin settlement and they had no way of detecting it. Like, I just feel like one of those stories is going to happen.
So, question, guys: who do you think will be the big player in stablecoins?
I mean, my money is on Stripe and Circle. Like, they're obviously just, in my opinion, miles ahead of the competition. What, you think it's going to be PayPal?
Well, I mean, they were the first ones to kind of issue the stablecoin, but you never know. You know, with Stripe thriving through, they may, Zoom might pass them. Zoom.
May the best win.
May the best competitor win.
Just not
They're
to agree.
already mad at Stripe anyway, so I can only imagine Stripe thriving in this. Sorry.
I would rather
Wow,
bet
did we hit time?
Yeah, just to have a different opinion. Sure, exactly.
That sounded like a
I'd rather
fire
bet
alarm.
on someone like more a retailer connected to everywhere, or even social network. But I would rather go for someone like Amazon to really maximize.
Ooh, good.
Yeah.
Yeah, the Amazon and Walmart, they're going to be very highly
We discussed
competitive.
about it a few episodes ago. But I think this sort of
we know,
retail,
super app.
super apps, exactly. Super apps, stablecoins, money moving everywhere. You need to be everywhere. And well, the difference, I guess, is that Stripe is B2B, mostly B2B, more and more known by B2C consumers as well, but it's mostly B2B, while Amazon is both.
Yeah. Okay.
You have a good
Chels,
one. Yeah.
Shira, your final takes on who you think will be on top?
Can't say. I have to admit that I can't say who will win because you all have different arguments. I mean, different
Yeah, that's the whole
insights regarding
point.
Yeah.
You can
I would,
agree or disagree.
no, but I agree. I mean, it will depend on everything regarding this compliance thing, also interoperability. Also, I mean, many things may happen also in the future, as you mentioned. They can be ready. They can issue all their stablecoins, but at the end of the day, we'll see. Don't have it. Don't know
Chels?
about Chelsea.
Sorry, guys. There is a weed
Wow.
whacker right outside the window, so I was trying to stay muted. Anyways, I do think Gab had an interesting take on the Amazon kind of the shop thing. I still think it'll be someone in the banking, on the banking side, whether it's
interesting.
I don't know.
Interesting.
JP Morgan.
Okay.
I'm not sure.
I have
So
two.
we'll have to just see.
And I'm surprised no one mentioned it. But do we think that there may be a possible government exchange or like government managed network?
Yeah.
So maybe
Good call. They're probably going to come in and participate for sure.
Maybe. Well,
maybe the digital euro will be there in 10 years when stablecoin will no longer be needed and there will be something else.
Well, we had to talk about it because like it's literally it's the only thing my news feed shows me is every day something new about stablecoin, something. And it's like it's getting to be one of those things where it's so much news, so many players. It's like, but aren't you all doing the same thing? Like, how is this company different from the other company? So we had to talk about it. It was a good discussion. Now you've got our takes on record. We'll see who's right at the end of the day. Who knows? Check back. We'll might have to check back on this in 5 years from now. But with that, I think we can wrap up. As always, thanks for listening to us nerd out. We appreciate it. If you like what we do, please like, subscribe, share, write us a comment, write us a review. We would appreciate it.
Yes.
Until next time. Bye.
Yeah. Have a great day.
Cheers.
Bye.